Hi everyone, welcome to my channel. My name is Reni. If you're new here, welcome. And if you're a returning subscriber, welcome back. I really appreciate each and every one of you taking your time out of your busy day to watch this video. If you're new to my channel, on my channel I do fashion, finance, lifestyle, and a bit of career. And today's video is going to be about finance and home buying. So I brought a guest on my channel. A lot of people had questions about the home buying experience, especially regarding the mortgage. And personally, I did not have the answers once again. So I decided to bring an expert to talk to you about mortgages. The expert that I brought on is Dammy, who is a mortgage broker. So she dropped a lot of gems and she gave us details on what an A lender is versus a B lender versus a C lender. I learned quite a bit. She also told us if you have no credit history here in Canada, how you can actually buy a property, which is really cool. I had no idea about it. And we learned about what like a variable mortgage is versus a fixed mortgage and how to refinance your mortgage if you need to. So I learned quite a bit. I'm excited for you to watch this. Make sure if you want me to interview any other experts, make sure you leave those comments down below, and I'll leave Dammy's information down below if you want to contact her. So let's get into the video right now. So today, as you can see, I have a special guest. I have Dammy on the channel. And today we're going to be talking about everything you need to know about getting a mortgage. And this is Canada-based, Ontario. We're based in Ontario. So I just want to preface by saying that if you're outside of Canada, these details may not apply to you. So just a word of caution. So I will let Dammy introduce herself.
Thank you, Reni, and thank you for having me on your channel. My name is Dammy Arumiura, and I'm a mortgage agent with Expert Mortgages. And what that means is that I connect home buyers with mortgage, which is the biggest financial decision of many people's lives.
Perfect. So I personally, as many of you know who are watching right now, I bought my house at the age of 23, which is why a lot of you came to my channel. And a lot of people had questions about mortgages. And honestly, I can only speak from my experience. So I couldn't really answer a lot of those questions, which is why I thought it would be a great idea to have you on the channel. So I can give my background on how I got my mortgage, and then we can go on to the questions. So for me, as you all know, I got my mortgage through a bank because I work at a bank. So I decided to get my mortgage with the same bank. And I got my pre-approval a few months in advance. I then got my mortgage. I don't know. Honestly, I don't have many details. It was a very smooth process for me, but I know a lot of people do not have a smooth process, and it's a little bit turbulent. So you do not work at a bank. You are a mortgage broker outside of a bank. So that's going to give us like a different perspective, which is good.
A lot of people like similar to you, when you think about mortgage, the first thing you do is go to your bank. Like I also, when me and my husband were planning to buy a home, we actually did use a mortgage broker, but I didn't have to start off on one. But that was because a very good friend of ours said, "Oh, I have this great mortgage broker. You should go to him." So that's how we made a connection, and we just went with him. But I think the moment where you're looking to buy a home, I think most people either go through like a recommended source, and that could be either a mortgage broker or your bank, which is the person that you already have a financial relationship with.
Yeah. And this is the biggest purchase of most people's lives, as you said. So I think it's very important to make an informed decision when you're going to choose who you're going to get that loan from, because it's a big deal. It's not. I asked people to send me questions, and we got quite a few questions. So I guess we'll just dive into them right now. And everyone, if you have more questions, you can also reach out to Dammy directly, and I'll put her Instagram on the screen right here. What is a mortgage broker and what do they do?
That's a great question. A mortgage broker. So first we have a mortgage advisor. Let me start from there. And even from the bank side, they have someone that you connect with. That person is an expert in mortgages, and they are trained to take your information and then tell you what you apply for, and then connect with the bank to facilitate the loan. But a mortgage broker just means that I'm an independent mortgage agent. So that means I have relationship with multiple banks and multiple lenders to offer mortgage advice to you, and as well as facilitate the process of you getting a loan. So when you come to me, I'm not following just one bank's policy. I have policies of the different lenders I work with, and I'm checking if you qualify based on everyone on my on my network. So that's what a mortgage broker does.
So basically, instead of working for one bank, instead of working at one bank, you have the interest of all the banks, and you can give them the best deal from all the banks. Is that
Yeah.
right? Oh,
Yes.
cool, interesting. I didn't know that. Maybe I think we should actually explain what a mortgage is. Maybe that would be helpful as well.
Yes. So a mortgage is pretty much a loan, but a loan that you use to buy your own home or like your rental property. So that's what a mortgage is. But because it's a loan for your house, that's the terminology of a mortgage.
Mhm. So, for example, when I was going to buy my house, obviously, say my house is $300,000. Most people do not have $300,000 that they can just put towards that they have laying around that they can put
Yeah.
to purchase a property. So you get a mortgage to cover the balance of what you cannot afford, basically.
Yes. So in that example, were buying a place that is 300,000. If you have, most people don't have 300,000 sitting down in their bank accounts, so that's where a mortgage comes in. That a part of that loan can be given to you by the bank, and that could range from, say, 250 to 100 or 150.
The next question would be, so I guess you kind of answered this, but what would be the difference between going directly to a bank or going to a mortgage broker like yourself?
Yes. So when you go to a bank, the mortgage advisor is advising you based on that bank's policy and based on their own lending criteria. But when you go to a mortgage broker, we're advising you based on everybody in our network. So that's the key difference between going through to your directly to your bank or directly to a mortgage broker.
So, do mortgage brokers also work with people outside of banks? Like, is it do you work with like private lenders, for example?
Yes, so mortgage brokers have A lenders, which are the banks that we all know about. We also work with B lenders. A lot of them people don't know about them, but they do a lot of mortgages. We also work with C lenders, and C lenders are private lenders. So, for example, we can come together if we have some money and we can decide to give that in the form of a mortgage to people. So that's the difference between A lenders, which are the top banks that we know. We have the B lenders as well as the C lenders, which are really private investors.
Okay. So the next question that we had was, what is the difference between an A lender, a B lender, and a C lender? So to see if I understand it, an A lender would be the institutions such as a bank. Bank. So if I
Yeah.
went to BMO or TD or CIBC, those would be the A lenders. Um,
Yes.
then there is the B lenders who are private lenders. Is that what it is?
No,
No.
so B lenders are also institutions. They
Okay.
just have more relaxed rules compared to the A lenders. And then the C lenders are the pretty much last resort. If you don't qualify for A lenders or B lenders, then we can come into the we can look at C lenders, and they have relaxed rules, but then you pay for it through interest. So it really depends on your
Mhm.
situation. That's what determines if you go with an A lender, B lender, or a C lender.
So most people would ideally want to go with the A lender, but
Yeah.
they cannot afford, or like they maybe their credit score is not good, or is that why they would choose a B lender over an A lender?
So it's not only credit scores. So if you think about it, for a bank or for an institution to decide to give you such a large amount of money, there are really five important things, and that could go from your credit, how much down payment do you have, and where are you buying from? What type of debts do you already have? So an A lender, if you think about them as they have all those criteria, in this case, the five C's. B lender comes in if for one reason or the other you don't meet all those five C's, and your credit might still be good. But for example, self-employed, there are one group of people that have difficulty getting a mortgage because A lenders want you to use the income on your notable assessment, but you could have made a lot of deductions and expenses. So
Hmm.
that amount is so low that you might not be able to qualify for a home that you can afford. So
Hmm.
that's where we consider bill lenders because they are more flexible that they could take into account your full income.
Okay.
So that's just an example where you have good income, you have good credit, but for one reason or the other, you can't qualify with an A lender.
So would a B lender's rates be higher, like the interest rate be higher than an A lender?
Yes, so would be higher, but sometimes not significantly higher. It just depends on why we have to move to a bill lender. For example, say everything else is good, you have good income, and but you have really bad credit, Then, of course, we have to go to a B lender, not really bad credit, but depending within a reasonable range, we have to then go to a B lender. Of course, at that point, they will price it higher. So
Yeah.
the interest rates are really determined by the risk. So you could be self-employed and you don't qualify for an A lender, but you qualify for a B lender. But if your profile is really strong, you can still get a really competitive interest rate.
So now that we know about the different lenders, A, B, and C, what are some examples of what they look for when determining the interest rate that they'll give you?
So the three most important factors are your credit, the income, and what down payment that you're putting towards the purchase of the home.
Mm-hmm.
And if all those three factors are strong, then most likely would be an A lender deal. And the interest rates would be really competitive. Even within A lenders, we still have banks price their products are different, and that could be because of some differences in policies. For example, some banks allow you to prepay your mortgage in the first year or second year up to 20%, but some people have only a limit of 10%. So those small nuances can actually factor into the different rates that even A lenders charge.
Okay.
The reason we moved to B lenders is because maybe one of those three factors that we just mentioned is not as strong or is not where we would like for it to be. And the B lender, if the other two factors are strong, and maybe one, you have good income, you filed for bankruptcy maybe 5 years ago, but recently everything has been good, then that will be a B lender deal. The interest rate will be priced in because now they are taking on additional risk, but that would determine how much rate. And depending on how low, of course, if it's just a few points, the rate can still be competitive. So, and then for C lenders, usually either all the factors are not there, or maybe there's just one of those factors. So you can always get a mortgage if you really want a mortgage, but the interest rate is also much higher. So if you can
Yeah.
pay for it, then you can get a mortgage.
Wow. Okay. So how high are we talking when it comes to these C lenders? What are some rates that you've seen?
It ranges. It can go from maybe 5 point something percent up until 12%. It just really depends on a lot of people when you use still lenders is for a specific period, maybe 6 months or
Mhm.
1 year. We also see some people that for example, if you're into flipping properties and it's a short-term loan, we'll see a lot of people like that go through C lenders, private lenders, because it's just for a short period and they might not be able to qualify with either B or A lenders.
Mhm.
Another group is, for example, if you bought a pre-construction property and for one reason or the other, especially with COVID, we are seeing a lot of this where they can no longer qualify for the mortgage based on A or B lender. We
Mhm.
could do a temporary C lender mortgage just to bridge that period. So whenever we go through the C lenders, there's always a clear exit plan. It's not a mortgage that you should probably hold for a long time.
Yeah.
But if it's within 6 months to 24 months, then we can consider the private lenders.
Okay. And I had another question that I didn't prepare you for, but
Yeah.
hopefully you can answer. So I know that when I bought my investment property, the A lender that I went with would not loan me more than 20% because, I mean, more than 80% because it was a investment property.
Yeah.
So is that the same for a B lender in that, or yeah, is that the same for a
Yes,
B
it's the
lender?
same. So that criteria is actually set by the government.
Okay.
So regardless of A lender or B lender, we need at least 20% if you're buying an investment property that you don't plan to live in. There
Okay.
are some investment properties, for example, if you're buying a two-plex or a three-plex and you're living in one of the units and renting out the other, that's still considered a mixed-use investment property. That would allow you to put less than 20% down. But if you will not be living in the building at all, then you will need at least 20% down, regardless of what
Mhm.
lender you go with.
Okay, makes sense. And then we have another question. What is a variable mortgage versus a fixed mortgage?
Yeah.
So I can say that personally, I just decided to go with a variable mortgage, just because interest rates are so low right now that I was like, if they go lower, I want to be able to cash in on the low rate. But yeah, that's what I decided to go with. But if you could tell us the difference between the two, that would be great.
So just to backtrack, when you're getting a mortgage, you have the option to determine the term of that mortgage, and the term can range from 1 year to 5 years, 5 years or 3 years. So based on the term of the mortgage, you can either fix your rate, which is called a fixed rate mortgage, for the term of your mortgage. And if we use the 5 years as an example, regardless of the fluctuations in the market, your rate will stay the same.
Mm-hmm.
A variable rate mortgage, which is what you have, means that that rate would fluctuate based on the market, right? If the rate is increasing, that means you also pay more interest. If it decreases, it means that you're paying less interest. So that's the difference between the two. There's really no uniform best strategy. It differs based on your comfort level. Some people like the peace of mind knowing that this is my rate, nothing is going to change for the next few years. But some people want to take advantage of if there's decreases in interest rate, at least they are paying less interest during that time.
Yeah.
But even within the rate that fluctuates with the mortgage, there are two types. You can have a variable where you have the same amount of money being deducted from your bank account every month. It's just that the way it's being split from interest or principal is what's different. But there are some other adjustable rate mortgages that if the rate is higher, you're getting deducted more, but if it's lower, you're deducting less.
Mm-hmm. That's good to know.
Well, not you, but the bank is deducting
Yeah.
less.
And right now, mortgages, what would you say mortgages are going for, like the average interest rate for an A lender is right now?
The most common, the one I just saw this morning, 1.4%, 1.5%.
Wow.
Yeah, historical low.
Next question that we had was, what is the right time to meet with the mortgage broker? So, for example, I know the first time that I reached out to the mortgage agent at the bank, I was like a year, but it was so long before I was even thinking of planning. They were probably looking at me like, why are you even here? So I wanted to know from you, what is the actual right time to reach out to a mortgage broker? And then what documents should you have prepared?
Yeah. Yeah, I think the right time is actually the moment you think about it that you want to buy a house within the next 1 to 2 years. And it's just good to have that conversation so that you can plan towards it, right? So I think as soon as you have an idea that you want to get a mortgage, it's a good idea to reach out to a mortgage broker or through your bank and ask them, what do I need? So that at least you know, because the worst thing is to think you have everything ready and you say, okay, I want to buy a house within the next 2 months, and you realize that you don't even have enough income or your credit is not great.
Mm-hmm.
So at least the first conversation is not necessarily a pre-approval. It's called a pre-qualification to say, based on your income right now and based on your future down payment that you're going to have, this is how much you think you can buy, and that way you can save towards that goal.
Okay.
So the best time is as soon as you are ready or as soon as you think that you want to get a place.
So if someone was looking for right now, would they be able to come to you, and how would they be able to contact you? Just to plug yourself.
So if you are thinking about buying a place, contact me through Instagram at Mortgages by Dammy, or you can contact me through my email. My email will be in the description box.
Perfect. Another question we had was about people who are looking to invest. So I know we kind of mentioned it earlier, but if you're looking to buy a rental property, what percentage of down payment do I need to have versus a primary residence? What percentage of down payment do I need to have?
So based on the CMHC, and CMHC means Canada Mortgage and Housing Corporation, the guideline says that if you want to buy a primary residence, your minimum down payment is 5%.
Okay.
If you are looking to buy a rental property, that doesn't fall within the guidelines. The minimum down payment will be 20%, as long as you don't plan to live there.
Okay. But if I am planning on living there and I'm going to rent it out as well, while I'm living there, I can do the 5% down payment.
Yes, correct. Your income qualifies for it, of course.
Mm-hmm. Okay.
Yeah.
So what wouldn't make me not be able to qualify for it?
Depends on the purchase price of the home.
Okay.
So there is, in addition to the requirement for your credit, which has to be at least 680, there is also your income. If you are buying a primary residence, the mortgage payments and the other expenses such as your heating and property taxes cannot be more than 35% of your income. So some people at 5%, you could be way over that 35%. So that would mean that you need more down payment just to reduce that ratio of debt to income.
Okay, I didn't know that. Good. I know a lot of people who are new to Canada are watching this channel. So I want to know, if I have zero credit history in Canada, how is it possible for me to get a mortgage?
Yes, it is possible. So under CMHT, there are some guidelines specific to new to Canada for people that are new to Canada,
Mhm.
and you can still get credit. The minimum requirement is that you have at least 3 months full-time employment, but then we try to use other ways to demonstrate the credit strength of your credit history, and that could be through like your rent payments or phone bills and other way that's shown that you are able to make your financial commitments.
Okay. And do you think an A lender would loan to them, or would that likely be a B or C lender?
It will be an A lender.
Oh,
Yeah,
okay.
if the income is strong, credit would be demonstrated through other means, and if that's strong as well, then an A lender would be able to use the New to Canada program to qualify.
Okay, that's good to know. Another question that we have. So this is what some say it's a similar situation, but this person is not new to Canada. They've been in Canada, but they have no credit history at all. They just never got a credit card, never got yeah. Say they never got a credit card. Are they still eligible for a mortgage?
No, because in that case, they've not shown ability to handle like a financial commitment. So they need to get a credit card because that's it's not I know a lot of people are afraid of credit, but if you think about it from the bank's perspective, if you've not shown that you can handle a $1,000 credit card and pay your bills, why do you expect the bank to hand you over 300,000?
Yeah. Yeah, yeah, I totally agree with you. But so they are not eligible to say, "Oh, I paid my phone bill or I paid my rent." They're not. That doesn't qualify for them, right?
No, as yeah. For an A lender, it wouldn't be an A lender. We would have to go to maybe a B lender in this case. And even a B lender, we have to demonstrate why they that person didn't get a credit. But for example, phone bill actually counts because it's reported to the credit
Oh
bureau.
yeah.
Okay. So if that person has a phone bill, they will
Mhm.
still be able to get a mortgage because that's something that shows up on their credit. But if they don't have any credit history, then that would be a challenge, and
Yeah.
would likely have to go to other lenders.
Okay. And just to repeat, I know you said it earlier, but what is the actual credit score that they're looking for if I want to go with an A lender, what credit score are you looking for?
If you want to go with an A lender, about 680 would
Okay.
be what we consider as good credit.
Next question that we have is how do you evaluate household income in the case of if I'm looking to purchase additional properties to rent? So, say I already have my primary residence, and now I'm like, okay, I want to buy my first investment property. How is my income calculated?
So
Is it
your income is calculated the same way as when you are buying a primary residence, but now if it's an income producing property, we also look at the rental income that that property will be generating, and that's used to see if you can afford it. So in this case, say you decide to buy a rental property, if we'll look at the rent relative to the mortgage payments or relative to your income and see if it covers it. If it still doesn't cover, then you might then need to your income needs to be high enough to make up that extra. So
mhm.
we do consider the rental income, and that's why a lot of people are able to afford multiple rental properties in addition to their primary residence.
Okay, so a second mortgage, but so when I'm applying, it'll say that like I have a mortgage existing. Does that an existing mortgage? Does that like turn bank like do they people not want to lend to me because I already have one, or it's all based on my income and the other factors that you mentioned?
It's all based on your income and the other factors that we talked about. In fact, I feel like if you had a mortgage, you've shown that you've been making your payments. I feel like banks also look at that positively. So
Mhm.
it doesn't deter you from getting another mortgage as long as you can afford it, right? And you can qualify for it.
Okay, good to know. Good to know. The next question is if I'm on maternity leave or I'm a self employed individual, can I get approved for a mortgage? I know we went over the self employed one, but if I'm on maternity leave right now, how is that determined?
So if you're on maternity leave, you can still get a mortgage. We'll need a letter from your employer stating what your income when you return to work and the date of your return to work, and we'll be able to use that income to qualify you.
Okay,
So
good to
if
know.
you even if you're pregnant or even if you're on maternity leave, you can still get a mortgage with your income, with your regular income, not your reduced maternity leave income.
Oh, that's good. And so then for self employed individual, there's no person who's like, how do they prove their income, especially if it fluctuates every month?
Okay, so for self-employed individuals, we want to see 2 years of history And that would be based on your tax documents. How much are you paying yourself, or how much dividend income are you receiving? And that's the amount that we use to qualify.
Mhm.
After all the expenses, pretty much your line 150, I think that's the number. That's
Mhm.
the income that we use to qualify.
What documents do I need to present to you when I'm proving all of these things for you to approve me for a mortgage?
Okay, so one, you need your letter of employment, you need your pay stubs. We also need 2 years of your tax notice of assessment from the government.
Mhm.
Then we need consent to pull your credits, and those are the main documents that we need to show that you
Okay.
can afford the place. Once the client comes to me, I will then review the application. I wear the hat of an underwriter to see is there any red flags that would make the bank not qualify. I then have to review the bank's policies to see who the best person is based on that person's profile.
Okay.
And I also ask questions about like, what's your plan? Are you someone that just looking to buy the place and you don't plan to do anything else for the next 5 years? Are you someone that is more investment focused that you're planning to take out equity? Because there are some banks that taking out equity is easier for some banks than the others. So I also have that conversation like, what's your 3 year goal or what's your 5 year goal, just so that so not only the rate is important, it's also
Mhm.
like your plan going
Yeah.
forward.
I think that's a benefit of working with someone like you because my person did not ask me any of these questions because obviously they're the only bank that I'm like that would lend it, right? So that's good to know. I have no idea about the answer for this one. Someone asked, am I able to consolidate my OSAP with my mortgage?
Let me say, if it's before getting a place, the answer is no. We do consider how much payments you're making month to month, and that will factor into your debt service ratios.
Mhm.
But if you currently have a place and let's say your equity has risen over time and you're still paying that payment, you can roll it into your mortgage. In that case, it's called a refinance, where we are adding up your mortgage balance to your OSAP debt, and we are just rolling everything into one mortgage.
Okay. And for
Yeah.
anyone who doesn't know, OSAP is basically the student loan program that we have here in Ontario. What is refinancing a mortgage? What does that actually mean, and how do I do it?
So refinancing a mortgage is pretty much getting a new mortgage, even though you already have a place. So I can give you two scenarios, right? The first is, let's say you already your mortgage balance is 200,000, and you want to, but your property has increased in value. You want to increase your mortgage balance to 300,000 and take out 100,000. So that's called an equity takeout refinance. It's pretty much just getting you a new mortgage, but for the new balance of 300,000, where
Okay.
you have 100,000 to put towards investment or even using it to pay off other debts, such as auto loan or other debts that could have a higher interest rate.
So you're taking money out of your current property, taking equity out of your current property, and using
Yes.
the money for whatever you want.
Yes.
Okay.
Or like just consolidating all your debts
Hmm.
and then rolling everything into your mortgage, just because the interest rate is really low at this moment. So if
Hmm.
you have other debts, it might make sense for you to do a refinance.
Yeah. Okay. Okay.
You could also renew if you don't want to take out money, just to take advantage of
The
the
interest.
low interest rates. But a lot of times when people refinance, is to take out some money from their equity to use it for other purposes.
Well, we answered quite a few questions, and I know this video is getting a bit long, so I just wanted to thank you for joining my channel. I really appreciate that. And if you want to plug yourself once again, so people know where to find you and how to inquire about your services, can you please do that for us?
Okay, thank you, Reni, for inviting me. And for anyone that is looking for, if this is your first time, you're looking to purchase a property, you don't know where to start, feel free to reach out to me. Or you could also be someone that is looking into buying an investment property, but you're not sure if you can afford it, or how do you find out that down payment. So if you're looking to buy a place, or you are looking to buy a second place, or even just renewing your mortgage into a lower interest rate, please reach out to me at mortgages by Dammy. It's That's my Instagram page. You can also send me an email at dammy.aromiwura@expertmortgagebroker.ca, and that would also be in the description.